such a controlled demolition. There's a certain comfort in the predictability of it all. You press a button, and the explosive charges go off in a really precise mathematical sequence.
Right, yeah. The structure just falls exactly where it's supposed to.
Exactly. It's totally engineered. The risk is completely priced in from the start. But then you have a day like today in the financial markets.
And it feels significantly less like a controlled demolition.
Oh, absolutely. It feels far more like you're standing right on top of a fault line during a major seismic shift. You know, you're watching these massive cracks just spiderweb out across the ground in real time.
And you have absolutely no idea how deep they go.
Right. And the reality is, I mean, if you have a retirement account, a mortgage, or, if you just buy gas and groceries, you're standing right on this fault line.
Because today's fault line isn't just one tectonic plate shifting. It's a massive high-speed collision of geopolitical shocks, incredibly sticky economic data, and, well, a harsh reality check on the AI build-out.
Welcome to Market Recap. I'm Daniel.
And I'm Mira.
So today is Friday, July 17, 2026, and we are unpacking a highly volatile trading session. It was marked by a really sharp correction.
Yeah, just to set the scene for you quickly, it was an incredibly wild ride.
Unbelievable ride. I mean, the S&P 500 futures fell to an overnight low of 7,473.00. Then the cash market actually saw a brief morning bounce.
Right. It peaked at 7,498.47.
Yeah, but only to roll over really hard late in the day, closing at 7,457.69. Meanwhile, the VIX volatility index spiked to an intraday high of 19.50.
And crude oil just surged aggressively. We saw Brent crude reach $88.08.
And WTI closed at 81.74. So what exactly are you getting in today's deep dive?
Well, first we're going to unravel the overnight geopolitical shock in the Middle East. Then we'll look at how sticky U.S. economic data and some really hawkish Fed commentary fueled stagflation fears.
And finally, we're going to give you a reality check on big tech's AI capital expenditure cycle.
But before we jump in, just our mandatory disclaimer. This deep dive is strictly for market context and discussion.
Right. It does not constitute personal investment advice or investment recommendation. So let's get into session one. What set the stage before the U.S. session?
Well, to understand the sheer volatility of today, we have to look at the carryover from Thursday's backdrop.
Yeah, specifically those intense kinetic U.S. military strikes on Iranian infrastructure from the prior session.
Exactly. And that leads directly to the massive overnight catalyst. At 4 p.m. Eastern Time on Thursday, Iran's Revolutionary Guards declared a complete closure of the Strait of Hormuz.
Complete closure to all oil and gas exports, which is just massive.
It is. And later overnight, Iranian drones heavily targeted U.S. ally bases and critical water infrastructure in Kuwait, Qatar, and Bahrain.
Now, when massive geopolitical headlines like this hit, there's a strong reflex to just view them as, random, unpredictable natural disasters for the markets, like a hurricane.
Right, people just panic.
But I want to challenge that. We need to view this through the lens of geopolitical escalation as game theory brinkmanship.
Oh, absolutely. Iran isn't just lashing out blindly.
No, they are deliberately squeezing a choke point that handles 20% of global oil transit. It's a calculated move to exert maximum economic leverage.
And just a quick impartiality check. Here we are strictly reporting the military strikes, the closure, and the diplomatic posturing without taking any political sides. We're just conveying the facts from our sources.
Right, exactly. So you can understand the market impact. But it wasn't just the Middle East, right?
No, we had China executing these dual tech maneuvers. Thursday at 4 p.m. Eastern Time, the White House disclosed a massive Chinese intelligence hack.
And this compromised 220 million U.S. voter records starting back in the 2020 cycle.
Huge breach. And then at 10:05 p.m. Eastern Time Thursday, Chinese President Xi Jinping proposed the World AI Collaboration Initiative, or WAICO,
pushing back against the U.S. expanding its national security definitions in the tech sector.
Exactly.
So to wrap up this first session, you have this combination of soaring oil risks and escalating global tech rivalries. And that created a severely risk-off overnight setup.
It really did.
All right, we're going to take a really short break, and then we'll be right back.
Okay, welcome back. Let's move into session two. What moved markets during U.S. trading hours?
Well, we got the 8:30 a.m. Eastern Time data dump, and it painted a mixed, honestly stagflationary picture.
Yeah, look at housing starts. They skyrocketed a massive 19% month over month.
To 1.427 million, which shows massive consumer resilience. But then building permits fell 3%.
Right, and industrial production growth slowed to this anemic 0.1%. Meanwhile, import prices ticked up 0.3%.
So you have this huge morning economic divergence. And then we get the hawkish drumbeat from the Fed.
Yeah, at 10:05 a.m. Eastern Time, Fed President Hammack noted that the core PCE nowcast is running hot at 3.3%.
And she stressed that inflation is broad-based now. It's driven by energy, insurance, and the whole AI data center build-out.
Which really echoes Fed Vice Chair Jefferson's warnings from the prior session, about how a rapid series of shocks could embed inflation.
Right.
And the dynamic here is really central bank demand destruction against supply inflation. They're trying to crush demand while supply costs just keep rising.
And the market reaction showed that tension. We saw the intraday S&P 500 slide, the VIX hovering near 19.
Yeah.
But I have to challenge the panic narrative here.
How so?
Because if you look at high-yield credit, the HYG ETF, it barely slipped. It closed at 79.65.
Oh, that's a really good point.
Yeah, we're seeing credit stability signaling a non-systemic duration shock, meaning the market expects higher rates, not an imminent banking collapse.
So to wrap up session 2, we have a resilient U.S. consumer colliding with energy inflation, keeping the Fed firmly on hold. And that's creating a brutal environment for equity multiples.
It really is. Let's take another quick break.
All right, we are back for session 3.
So what were the key corporate events, and what should we watch next? Because tech was in a massive tug-of-war today.
It really was. Let's start with Apple. At 9:33 a.m. Eastern Time, Apple surpassed NVIDIA to reclaim its title as the world's most valuable company.
Boosted by early antitrust settlement talks with the DOJ, right?
Right. And they newly announced subscription price hikes for Apple Music and Apple One.
Incredible pricing power. Then at 12:17 p.m. Eastern Time, reports surfaced that Meta is in talks to lease computing power to Anthropic.
In a deal worth up to $10 billion.
Yeah, which briefly counters that fear of AI capex as a self-defeating valuation loop. It shows real infrastructure monetization.
But then at 3:03 p.m. Eastern Time, news hit about SpaceX.
Yeah.
Despite talks to provide AI cloud computing to the Pentagon, SpaceX suffered a massive private valuation slump. It erased $1 trillion from its peak.
Wow. And that's a prime example of physical infrastructure costs undermining digital growth valuations.
Exactly. And speaking of infrastructure, at 3:32 p.m. Eastern Time, Trump disclosed a record $265 billion commitment from TSMC in Arizona.
Just staggering numbers.
Oh.
Given today's intense military escalations and the VIX spiking toward 20, the closing bell didn't just end the trading session. It sounded more like a regional air raid siren.
Yeah, no kidding.
At least Apple managed to reclaim its crown as the world's most valuable company, though they immediately celebrated by hiking their subscription prices.
Of course they did.
I suppose if we are forced to watch our stock portfolio slide while crude oil surges, Tim Cook wants to ensure we pay a premium to stream our favorite doom-scrolling soundtracks.
That's entirely fair.
Let's just hope SpaceX's trillion-dollar private valuation collapse doesn't cancel our flight plans, because a one-way ticket to Mars is starting to look like a very attractive defensive hedge.
I think a lot of people would take that ticket today. So what is exactly on the radar next? Here is the exact list from our sources.
Okay, what do we have?
Number 1, over the weekend and into Monday, watch the Iran-U.S. conflict and Strait of Hormuz shipping headlines. Number 2, Sunday at 9:15 p.m. Eastern Time, China releases its July 1-year and 5-year loan prime rate fix.
Got it.
Number 3, Monday before the U.S. Open, AMD reports Q2 earnings and AI demand guidance. Number 4, Monday at 8:30 a.m. Eastern Time, we get Canada's June CPI.
Okay.
And finally, Monday at 10 a.m. Eastern Time, the Conference Board releases the June U.S. Leading Economic Index.
I'd love to hear your thoughts and theories on all of this, so please share them in the comments.